Good morning, everybody. Hey, welcome to this Friday. It is the last Friday of February. Hard to believe. Come back on Monday. It'll be March, and it will be what? Springtime, right? March is springtime, March and April. So, hey, looking forward to that. Little change in weather, maybe, as we head in. Yesterday, mixed bag. We'll talk about that and more as we close out the month of February. Stay tuned. Dave will be here in just a second.
7 Light FM. We are up to 70 degrees here. It's sunny around the hood, and it's 8:41 now, 19 before 9.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
And it's time to check in and see what's going on Wall Street. And boy, things can change in a hurry, can't they? Through the good auspices of Philip Statler from Statler Financial Services, who's on the phone this morning. Philip, good morning. Good to hear you this morning.
Good morning, Dave. It is the last trading day of February as we head into the last month of the quarter, March. I was hoping, Dave, we could end up today on a positive note,
Well,
but
I got
it's
I
not
got
looking
bad
that way,
news.
is it? It's not looking that way, is it?
Yeah, I keep thinking of Caddyshack and Animal House parodies to describe the behavior of Wall Street, and the federal government managed to throw a baby Ruth into the swimming pool. If you watch Caddyshack, you know the reaction for that one. We got our producer price index in this morning, and everybody jumped out of the pool like crazy. If you follow inflation and all of its implications on the Federal Reserve's interest rate strategy for the rest of the year, they expected a top-line number for wholesale prices, which tends to precurse consumer prices in a month or so. They expected a third of a percent increase in the wholesale price inflation rate. That would have been down from the prior month. Well, we got two different numbers, and neither one's good. One of them said that the inflation rate for the wholesale inflation rate top line was 0.5%. The other one said 0.8%, and they both really qualify as a baby Ruth in a swimming pool, don't they?
Yeah, and we can't really decipher which is correct. I mean, one's come from one news source, one's come from another news source. So I'm just not sure what that number here. I'm diving a little deeper here, Dave.
Okay. The problem is both those news sources we're quoting are credible, so it's not like we're following People magazine for this either, isn't it?
So if I dig deeper into the one that says point 0.8, and I
Yeah.
actually go in and read the article or the little bit of blurb here, it said headline PPI rose 0.5%. Seasonally adjusted, it was up 0.8%.
Ooh, okay.
But the raw number was 0.5%.
Which is still
Even
dang near twice as much as anybody expected, which is still El Stinko. The only really good news that came out of the producer price index today is the fact that the core, getting out the volatile things, the core producer price index was only up 0.3%. We actually did that the way it was expected to have happened. So it was the volatile prices that drove it up, but still, anybody owning interest-sensitive stocks and trading in them and trying to guesstimate what the Federal Reserve is going to do about inflation cannot be happy this morning, because that looks like a sell order waiting to happen for an interest rate sensitive stock, doesn't it?
it does, Dave. I mean, that's giving us every indication, like you said, that inflation is definitely not under control. So we can expect the Fed to hold tight on interest rates. And I would not be surprised, Dave, if we start hear some clamoring about maybe even a 0.25% increase in interest rates. And I think Goolsbee, one of the Fed presidents, even
Mm-hmm.
kind of indicated that earlier in one of his speeches. So, it's something that is unfortunately we just can't get this thing under control.
And it's obviously not being managed down in the direction that we want to see it happen either. So That's step number one to start the morning out. Step number two, just to set the table and tell what's going on. Blue chips were up. The Dow was up by 17 points yesterday. Standard & Poor's 500 was off by 0.5%, down 37 points. NASDAQ was down over a full percent, down 273 points. And the Russell kind of followed the Dow more than anything. They were up a full 0.5%, which kind of tells me tech sell-off. And, then I looked at it. And NVIDIA, after cleaning the floor with their projections, still lost like 5% yesterday. And I'm sitting back and saying, wow, what do you have to do to impress a market these days, huh?
You would have thought NVIDIA would at least held its own. But the only thing I can think of, Dave, is there's a run up in the stock the last few days thinking that, it's going to be a huge beat. And when it wasn't a huge beat, you saw traders dumping.
Which
saying, look, I was in for a short gain.
Yeah, begs the question again, what qualifies as a huge beat in the tech industry? Because on paper, I think you and I would say they did have a huge beat. Bottom line is, when you're a glamour industry, you cannot win, and that really is the tale of the tape. We do have some good news for one stock, not good news for their employees. The people that do Cash App and those little square things we do to accept credit cards on our phone, the Block people, they announced yesterday evening that they were laying off dang near half of their labor force and basically automating the whole darn company under artificial intelligence. And labor unions aren't exactly publicly traded, but I got to believe any labor-intense business is looking at that and saying, oh, my God in heaven, how am I going to be able to match that kind of cost-cutting come next quarter?
I mean, Dave, that's 4,000 employees. That's a lot of employees. Now, I'm assuming because Block, and I think they're based probably out of California, so I'm not sure how fast that will actually, they can actually let those people go. They'll have to do their regulatory filings and that kind of stuff. But within 3 to 6 months, obviously, that's going to be 4,000 less employees at Block. That's a big deal. And
absolutely.
And that stock's loving it, Dave, because that stock is now up almost 19.5%.
I'm kind of looking at this story before anybody reads into tea leaves and saying it's a major industry trend. I mean, the primary brands that Block runs are Cash App, which is pretty much an automated, cash transfer protocol, and the Square credit card acceptance thing. I'm kind of seeing that as being probably the most automatable industry out there. And I don't know too many other lines of work that have anything that lends themselves that much to being able to say, well, anything that people are doing, we can do with machines. So I'm hoping that doesn't end up becoming something that's being expected of every company come quarterly report time. It's kind of an anecdotal situation, at least to my mind on it.
Yes, it's pretty specific to certain types of businesses for sure. So let's flip over. We've talked about Netflix a while and Warner Brothers, and Netflix says no deal, walking away from their proposed deal with Warner Brothers, just saying that, hey, we don't want to. They probably could compete, but they do not want to compete with Paramount to buy the stock. So I think Netflix is really, stockholders are loving that. Up 9.33% this morning, percent. So that's a huge jump for them. And you look at the likes of Paramount, they're jumping about 4% this morning. So it looks like everybody's happy except for Warner Brothers. It's down about 0.9% this morning.
You gotta love it. I enjoyed Netflix's response that they put out in the public. They said, "Hey, Warner Brothers was a nice to have, not a gotta have function. So we're going to say just never mind." It was interesting because I think a lot of the bigger heads in the industry were kind of poo-pooing Paramount just being an annoyance factor in that purchase, and they'd all given it as a given that Netflix was going to end up buying Warner Brothers.
It makes you think, Dave. Hey, you know what? I'm going to bid it up, let Paramount bid it up, and then I'm going to walk away, let them pay the higher price, and then that helps my bottom line. It hurts their bottom line.
Somewhere down the line, you can't help but wonder if that motive wasn't floating around there somewhere. Other tidbits out there. Apple announced yesterday, by just teasing as much as anything, big announcements coming over the next week, which can't hurt Apple stock because they've got groupies that are just madly in love with their brand. Probably the big announcement is going to be the new SE model iPhone, the basic fancy pants 17, but without the fancy pants camera at a lower price. So that's something we'll watch this week and see what Apple does over the next week or so.
Yeah, man. So we'll see. They always come up with something.
Absolutely. It is still earnings season going on, and after the mixed bag we had yesterday and the weird stuff that happens this morning, one of the old dinosaurs in the computer industry reported. You almost forget Dell exists until you look at your desktop, and there's a pretty good chance you own one. How did they do last quarter?
Dell actually had a pretty daggum good quarter, Dave. They beat by about 35 cents a share, a little bit more than that, which was good news for them. They beat by about $1.5 billion in revenue. So they've just finally, maybe Michael's turned things around again, and heading the right direction. Because I got to tell you, Dave, they have gotten beat up the last probably 3 months or so have really gotten beat up. But this morning, up 11.75% this morning. So a nice little move for them this morning.
I can't help but believe that a big chunk of that quarter comes from the fact that every time you turn on a computer that's still running Windows 10, Microsoft nags you to dump this sucker and buy something new. you want an advertising program, have every computer screen in the world saying, this is a piece of junk you're using, buy a new one.
Yeah, there you go. That's right. You got to keep up with the times. And I will tell you from past history, a laptop is about every 3 years, you got to replace it.
Pretty close. That's about the cycle that I get out of a laptop. You're absolutely right. Other indications this morning. What do we got?
So let's see what else we've got as I walk through here. Intuit reported, Intuit's the company that has QuickBooks and TurboTax and all those things. They it looks like had a decent quarter, but not decent enough. They actually, it looks like maybe missed on some of their numbers. And so even though they reaffirmed their full year outlook, they seem to be tumbling this morning, and they're trading down about a little over 2.5% this morning.
Surprised with all the renewals at the end of the year for QuickBooks. Maybe putting that junk online wasn't the best thing they ever did for themselves.
Well, yeah, I'll tell you. I mean, the prices are getting up there, right? And so it's getting to the point now where the small business guy, it's not a small expense to have QuickBooks. And so
No.
I think people are turning to alternatives because it is getting expensive.
Yeah, small businesses like ours, I mean, it's becoming a discrete line item. It used to be almost disposable money to keep our QuickBooks active. Now with the subscription, it's a measurable expense in the company income statement.
Yeah, if you run payroll through them, it really starts to climb.
Thank you to our accountant downtown. Anything else this morning before we tie the ribbons?
Well, let's just see. I'm scrolling. Dollar Tree got downgraded from buy to neutral by Citibank. That's got them trading down about 0.6%. But that's really about it today, Dave.
All righty. In case we'll reset the table. Blue chips did okay yesterday. Non-tech stocks did okay. Tech stocks were El Stinko. That's a summation of the entire bunch. After that inflation report, how bad is it 45 minutes before we open?
Well, the Dow is going to, right now, it looks like it's going to shed about 1%. That's a pretty big number as we head out today. The S&P 500 is not too far behind. It's down about 0.8. The NASDAQ 100 is down about 0.9. And then the big loser right now, obviously, is the Russell 2000, down almost 1.5% this morning. On the other side of the coin, silver making a huge jump this morning, up 5.5%. To $91.82 an ounce. Gold up 0.75% to $5,232 an ounce. Unfortunately, Dave, crude oil is heading the same direction, up 3.8% to $67.70 a barrel.
Somebody must have noticed that other aircraft carrier we got close to Iran again. Well, looking across the ponds, the Asian Rim market was a decidedly mixed bag this morning. The mainland Chinese markets, basically net flat. One was up, one was down by about the same amount. Hong Kong, on the other hand, did recover from a shellacking they took yesterday. On the European side of the fence, it's more green ink than red, but on balance, after a couple of the big ones showing red ink, we're down by about 0.2% halfway through the European trading day as well. It's really a weird mixture. Some are up by a full percent, some are down by a full percent over there. Getting my retirement together and planning how to make it happen, I need some surety here. How do I find you to make sure I can count on my retirement?
Then give us a call at 863-382-0037. They can also go to our website at statlerfinancial.com. And then catch the Statler Financial Radio Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And at newstalk730am.com. You have a dynamite weekend, my friend, and I'll see you next week, all right?
All right, buddy, you too.
Be well. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Hey, folks, thanks for joining us. I hope your February was well. Looking forward to talking to you in March. Stay tuned. We'll see what's happening. Until then, have a great weekend. Bye now.